the Muni market, and more importantly, that's spending on infrastructure. An influx of travelers has fueled a borrowing boom. And U.S. airports have sold more than $12 billion of debt this year. It's an effort to raise cash for expansion projects. Here to talk a little bit more about this is Jason Appleson. He's head of municipal bonds over at PGIM Fixed Income. Jason, great to have you here. And I do want to talk about the modernization of these airports. We've seen this here in New York with some great improvements they've done to LaGuardia, to JFK. O'Hare earlier this year, the city council there approved some new debt to try to sort of fix that up as well. Is this good money being spent?
Absolutely, yeah. And it's necessary money being spent. I mean, you look pre-COVID, when COVID actually hit, the airports didn't have a good sense of what the future of traveling by air would look like. You know, I have a neighbor who builds the lounges for, for Capital One, and he told me, like, when he was flying around during the pandemic, he was the only one on the flight. But now that you realize that TSA activity has exceeded pre-COVID levels, the expansion is necessary.
We'll get to lounges in a second because I got a beef with that. But I do want to talk about from an investor perspective and investing in specifically airport types of projects here. Do they typically offer pretty healthy returns? Because, I mean, you're putting a lot of money into it, but where is the money coming back? Are they raising fees? What are they doing?
Absolutely. So airport debt is paid with leases from the airlines, and there are different configurations on how the airlines pay those. But essentially, it is a good investment for the airline because they're refurbishing gates, adding capacity, and overall, it's a win-win for both the airport and the airlines.
So Sacramento, Charleston and South Carolina are all municipalities that are selling or planning to issue debt for their airports. Which projects are getting the most attention right now?
I think they're all getting a lot of attention. I mean, these are big deals in the Muni market. We all know supply has been elevated in the Muni market this year. But I think especially airports, which are often subject to alternative minimum tax or AMT, are getting a second look from investors because the premium that the issuers offer for those AMT bonds can range somewhere in the tune of 80 basis points.
Got it. And we've seen a 100% increase in airport debt issuance, which is simply massive. But we know that these things go in cycles, right? Because, you spend a lot and you work on the project and then you don't have to borrow for a while. So does that mean we're in a quiet multi-year period coming up for these kinds of airport debt?
I wouldn't call it quiet. I think most of the capital improvement programs last 3 to 5 years. So I think we would see this level of issuance continue for that period of time, especially as airports who paused their capital programs during COVID catch up.
I am curious, too, about the political environment we're in right now. We have an election coming up. There's a potential, depending on how it shakes out, we could have some significant changes in tax policy. And I'm wondering how that feeds into the municipal market. Does that potentially make munis more attractive, or is this going to make, or the opposite?
We think so. I mean, there's a number of permutations of outcomes of who's in Congress, who's in the White House. But I think there's a lot of anxiety that taxes could reset higher, especially with the Tax Cuts and Jobs Act legislation rolling off in 2025. So everything's on the table. You've got personal income tax rates. AMT is something we already talked about, corporate income tax rates, and frankly, the exemption itself could be at play if it's used as a pay-for to fund some other issues from the candidates.